Hello folks, this is Huskins, the Forex Mentor. I wanted to share with you the trade plan, the post-spike trade plan to trade the retail sales numbers from Canada. It's an important 3-4 star report, so it does create some amount of spike and volatility. And I have a trade plan created to maybe harness that volatility and milk it for some pips. I'll just share it with you. Now, before I share with the trade plan, I want to share with you the chart setup. So I'm going to use the US dollar USD CAD pair, and I'm going to load the 5-minute chart, and on that I'm going to load the 21 SMA. So this is the 21 SMA, as well as the 200 SMA. So that's what your chart setup is. Now the trade idea is to trade in the direction of the 200 SMA after the news release, when we get a crossover of price and the 21 SMA. If I've confused you, just let me give you a few examples, it'll become all clear. So let us say that let's look at this date. This is on the 21st of June. So right now we have the news come out. The news is negative for the Canadian dollar, positive for the USD CAD pair. The market tends to go up, and right at this point in time I'm looking to sell the 21 SMA cross. So if it goes up and comes down and crosses the 21 SMA, I'm going to sell. But that did not happen. The price crossed above the 200 SMA, continue to move up. Okay, and continue to move up. Now we have a positive side of the prices on the positive side of the 200 SMA. So now I'm looking to buy the crossover of the price and the 21 SMA, but price so far has not crossed over, and let's see what happens. Finally, at about 1240 or 1250, I'm not too sure whether I have taken this trade or not, because it's too far away from the news. But nonetheless, this is the trade plan. That now that the price has come down below the 21 SMA, I am interested in trading the crossover. So this is the crossover. So this is where I buy it, and let's see what happens when I buy it from there. You can enjoy your pips. So in this particular trade, we get our entry pretty late, from 8:30 right up till 1 o'clock. We might have to wait. The idea is not to trade the immediate volatility, but to trade the longer term trend, which is depicted by the 200 SMA. Now let's look at another date. Now what should we be looking at? The price is above the 200 SMA, and the market wants to go up. So now I'm waiting for a cross back below the 21 SMA. I will do nothing when it crosses down below, but when it recrosses back above, I'm going to buy. So let us see what happens. Okay, now the market has changed, and the market is below the 200 SMA. So let's see what happens. Market has changed again, and now again the price has closed above the 200 SMA, and above we've got a cross with the 21 SMA. What do we do now? Now the idea is to buy it. Why do we have to buy it? Because now it was a flat market, and but this particular price action is telling us that the USD CAD pair might want to go up even further. So let's see whether it does. So you buy it from there and enjoy your gains. Let's look at another example. So we have a nice downward sloping 200 SMA. We have the USD CAD spike up on news. It must have been bad for the Canadian dollar and good for the USD CAD pair. And like right now, the market has gone above the 200 SMA. So um, in case it remains there, then I'm looking to buy it. If in case it moves down below the 200 SMA, I'm looking to sell it. And what happened? The price moved down below the 200 SMA, so I sell from here and enjoy the downward movement. Let's look at another date. So here we have 200 SMA. It's a nice upward sloping curve. We have a price which is the USD CAD pair goes up on the news. Now I'm waiting for price to trade below the 21 SMA. Okay, so now this is not trading below. It has not yet traded below. This is trading below. This is trading below the 200 SMA. If the market is just touching it and kissing it, kissing the 21 SMA is not trading below. So now we finally have a cross right here, and by the end of the day we would be more or less at break even. Now let's look at another example. This is on the 21st of February. News comes out, it seems to be a non-mover. The 200 SMA is trending upwards, so wait for price to trade below the 21 SMA. Is it yet trading below? Not really, not really. Sorry, this vertical line was my news line, so all of this price action is irrelevant, but let it come down. So now price goes above the 200 uh, 21 SMA, but it hasn't really traded below the 200 the 21 SMA, so this buy is not counted. Now that the price has actually traded below the 21 SMA, I'm now interested in buying. So I'll buy right from here. 0.9960-ish area is where I buy from. Okay, the market goes against me for about 10 pips and then it starts moving back into my favor. So a 30 pip gain or a 25 pip gain or target would get me out of the trade, uh, and that's what in short the trade plan is. Trade in the direction of the 200 SMA after we get a price plus the 21 SMA crossover. Hope this video helps. Thank you.